Well, after rising for 10 days in a row, the All Ords finally fell today, but only by a tiny fraction. But it's done pretty well lately, having jumped 5% from its low point a few weeks ago. But overall, it's still down more than 1% from the record high it touched just before that huge sell-off at the start of the month. Meanwhile, today's worst performer was Ingham's, which played chicken and lost. Its share price plunged despite its profit jumping 68%, which, it seems, wasn't good enough. But Main Pharma shares surged despite its $169 million loss, which wasn't as bad as last year's. And ANZ did poorly after the financial regulator APRA ordered the bank to keep an extra $250 million in reserves. So that's money just sitting there doing almost nothing, which is a bank's worst nightmare. All this while another regulator, ASIC, investigates the bank for market manipulation in relation to its bond trading. Now, this is really hurting ANZ as it's fallen behind the other banks on a total returns basis, which tracks the increase in its share price and dividends. Now, overseas, Wall Street fell quite a bit, but it was a mixed bag for Asian markets. Oil prices rose sharply, while gold, iron ore and copper fell. And the Aussie dollar is buying 67.2 US cents. And finally, Tesla is no longer the top-selling EV brand in Europe. That honour now goes to BMW. And it just so happens the Tesla brand is turning toxic, according to consumer surveys, which could be a CEO problem. And that's finance.